we are covering cash charitable contributions, a topic the exam will absolutely test you on, specifically the adjusted gross income limitations. The primary rule to remember for cash donations to qualified public charities like the Red Cross or a local church is the 60% of AGI limit. For example, if a taxpayer named Alex has an AGI of $100,000, the maximum cash contribution he can deduct in the current year is $60,000. The exam will give you a scenario where the donation exceeds this limit. Let's say Alex donates $70,000. He can only deduct $60,000 this year. The exam will then ask, what happens to the remaining $10,000? The answer is that it's not lost. It can be carried forward for up to 5 years, subject to the 60% AGI limit in each of those future years. This 5-year carryover rule is a critical detail. Now let's talk about proof, because this is where the exam sets its most common traps. For any single cash contribution of $250 or more, the taxpayer must have a contemporaneous written acknowledgement from the charity. A canceled check or a credit card statement is not enough for a $300 donation. The exam will present this exact scenario, hoping you'll forget this strict requirement. The acknowledgement must be received before the taxpayer files their return, and it must state whether the charity provided any goods or services in exchange for the gift. This leads us to another key area called quid pro quo contributions. This is Latin for something for something. If a taxpayer donates $100 to a public television station and receives a tote bag valued at $15, they can only deduct $85. The deductible amount must be reduced by the fair market value of the benefit received. The exam loves to test this by asking for the deductible portion of a contribution made at a charity auction or fundraising dinner. Another point is timing. The deduction is claimed in the year the payment is made. For a check, this means the date the check was put in the mail, not the date it was cashed. For a credit card donation, it is the date the charge is made, not the date the taxpayer pays their credit card bill. Finally, remember that for the 2025 tax year, the special provisions from previous years that allowed non-itemizers to take a limited deduction for charitable contributions have expired. This is no longer allowed. To remember the strict proof requirement, use this phrase, $250, don't be thrifty, get the letter swiftly. This reminds you that at the $250 mark, you cannot be lazy with documentation and must obtain that specific written acknowledgement from the charity to secure the deduction.